This is the last part, and it is the shortest. So let me get to where is my PowerPoint on here? Okay, so we are on to the end. We've bought our assets, we've depreciated our assets, and we've decided that we are going to go ahead and either sell or retire, meaning we're just going to throw it away, or exchange our assets. So we've got some extra accounting to do. So, right, most common method is to dispose of them, retirement, sometimes things just can't be sold, or exchange them. Why they put trucks here, I don't know. Oh, they've got that red pen marker coming back again. Yuck. All right, so let's illustrate a long-term disposal. $40,000. We estimated we'd be done with it. It would be worth about $5,000, and we thought that would take 5 years. So remember, that meant we were depreciating $35,000 over the life. So if we sell it after 3 years for $22,000, we're going to have a different set of circumstances than if we sell it after 17. So let's go through each of those. So we sell the truck after 3 years for $22,000. Well, we've been depreciating that truck every year. We originally cost us $40,000. We've depreciated it $21,000, because we were doing $7,000 a year times 3 years. So our current book balance is $19,000. Well, if somebody's willing to pay me $22,000 for it and I sell it, well, that's yay, right? I mean, I've got good news there. They're paying me more than I thought. Another great way to illustrate that depreciation is nothing more than a guess. Right, so I'm going to debit cash. I'm going to clear out the accumulated depreciation balance of $21,000. So remember, it was $21,000 up here. I'm going to take off the equipment balance of $40,000. Well, does my entry balance? No. So I'm going to balance the entry with this new account we've not used before called gain. Gains are on the income statement, and they're good, guys. People like gains, right? What do you think if we like gains? What don't we like? We don't like losses. So let's look at one with a loss. Now I've sold, same fact pattern, but I've sold my truck for $17,000. Right, so I paid $40,000. I said it would be worth $5,000 at the end. I've depreciated $21,000. So now I have a book value of $19,000. It's the $40,000 minus the $21,000. But somebody was only willing to pay me $17,000 for it. And this is the more likely scenario. This is what companies see. So I get my cash of $17,000. I clear out that accumulated depreciation account, right? Because the equipment's going away. I've got to take that account out. And I also have to take the equipment account down to 0. And this time, to balance my entry, I have a loss. Wah, 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 right? Nobody likes a loss. Unhappy face. Right. Now I've just decided to stop using it, right? Nobody's paying me anything. No money, right? I'm just not going to use it anymore. So I have to stop depreciating it. Same fact pattern. It's worth $19,000 at the time I stop using it. And I need to go ahead and record a loss. So why might that happen in a business? Well, I'll give you some good examples. A lot of times we were out there when I was at the banks, and we were buying a lot of software, right? So we'd have software on our books that we were using, and maybe that software had a balance of $5 million. And we'd been depreciating it down. We didn't think we were done using it yet. It had $5 million on the financial statements. And all of a sudden we heard of a new software, right? And the new software is what we want to use. So we buy that, but then what do we do with this that's on our balance sheet? Well, we retire it, right? So if people pay us 0 for it and it had $5 million on book value, we would have a big loss of $5 million. Believe it or not, things like this actually drive business decisions, right? Because there are times where we wanted to use that new software and we just didn't, because we did not want to take, right, the loss, because people get sad about losses. All right, so what if I exchange it, right? Now, if I exchange it, What that means is somebody's giving me something for it, right? So in this case, I go to the truck dealership and I want a new truck, right? And I have to pay a little bit of cash and give them my old car, but I'm going to get a truck. All right. I know my new truck is worth $45,000, so I'm going to put that entry on the financial statement. I had $40,000 for my old truck. I got to clear that out. I had accumulated depreciation on my old truck of $21,000, and I had to pay them cash of $22,000. Now in this case, let's see here. Does that entry balance 6456? 66 minus 62. Oops, it does not balance yet. So in this case, we had a gain. That's highly unusual, but good for the illustration. So that just means that we got something in value back, more of what we gave up, right? Same concept as if somebody had paid us cash. So try this problem on your own, pause the recording, and we'll come back and do it together. Okay, we've got a tractor, cost us $33,000. We knew at the end of it, or we thought at the end of our use, it'd be worth $3,000, and we were going to depreciate it over 5 years. So in this case, we sold it at the end of 3 years, so we didn't use it as long as we thought. And we're going to try to figure out if there's a gain or a loss by looking at what somebody paid for it, less the book value, right? And remember, book value is the original cost less the accumulated depreciation. So somebody has given me $20,000. My original cost was $33,000. I've depreciated $18,000 so far. So my book value at this point is $15,000. Wow, this is great. Somebody's paying me $20,000. And my financial statements only say it's worth $15,000, so I've got a gain of $5,000. And our journal entry for that, right? Cash of $20,000. I got to clear out that equipment balance, right? Which that's the original. See, I want you to notice that the equipment balance is same as the original cost, right? That's never going to change. What changes as we lower the value is that contra asset of accumulated depreciation. Right, so I'm taking that off, and my difference is a gain. I know it's a gain because it's a credit. Okay, so I think this is probably pretty obvious to you guys, but let me just write it over here on the side anyway. Gains make people happy, and it's a credit. Sorry about the background noise. I think Phil's on YouTube. Losses make people sad, and they are debits. And remember our song, credits on the right, debits on the left. Or I think I'm singing the song backwards. All right, so hang on. Sometimes I don't quite know how to make this work. Okay. Not going to do asset impairment. That's the same thing as the net realizable value that you're going to be doing on the inventory, so no need to duplicate that. I will not put questions on the exam on that one. And that's it. That's the end. So I hope you guys are all doing well. I hope that you will send me a message. So remember, tell me how you're doing. And please, please, please don't forget to take the exam this weekend and set up time with me if you need it.